FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 1/21/19. Right now, I am still in Vancouver attending the Vancouver Resource Investment Conference. If you're around and you see me, come up, buy you a drink, or I'll buy you a latte if you don't drink. And, well, a lot of companies here, a lot of action going on. The mood is, I'd say, guardedly optimistic, which when you're talking about metal prices, gold, silver, at this point in the cycle, it's probably the best you can be is guardedly optimistic, because the sector has been in a bit of a recession, a bear market, for almost 8 years now. And that's a long period of time where a lot of companies get driven out. A lot of investors lose faith, lose hope. Capitulation happens. Has it happened yet? Not sure. I mean, looking at the numbers, looks like there was a golden cross whereby the 200-day moving average crossed the 50-day moving average, which is normally very bullish, but in this market is not dispositive. We saw gold get up to the high 1290s, but it just can't cross 1300. Saw silver get up to the high $15 mark. Couldn't cross into 16. So those are definitely bearish factors. Hey, as always, we invite you to be part of the show and write us. I'm going to be doing a show, hopefully, once I get back to Florida, with all of your questions, at least 1 or 2 shows, or maybe 3. I've got so many saved up, and John's taking a break right now. He's a little burned out, John Rubino. So anyway, maybe we'll do them with our next guest here, somebody who's been on the show before. He's got a great site, really can help you get informed about these unique opportunities that happen in the mining sector. The name of the site is miningstockeducation.com, and the proprietor is Bill Powers. Bill, welcome back.
Thanks, Gary. Always great to join you.
Hey, so we saw this golden cross in precious metals prices, in gold prices right now over the past couple of days, week. And normally that's a very bullish signal. But in this case, we've got the countervailing argument that gold just won't break that $1,300 technical resistance point. Silver is not breaking $16. And we've seen these golden crosses occur over the past few years, and nothing happens. What's your take on it?
Well, the counterpoint, as you kind of mentioned in your introduction, is that if you look back 2 or 3 years at the GDX, GDXJ, or the Huey, you could argue for we're still in a bear market based on the technical analysis, because you do see lower highs and lower lows in the last 3 years. So that would be the counter argument to say that, we might have seen a gold rally in the last couple months, but that doesn't confirm that we're yet in that gold bull market that gets people excited like we saw in early 2016.
Mm-hmm. And early 2016 just kind of petered out. So obviously that was not a bull market or the return to a bull market. It was just a strong rally that lasted a relatively short period of time.
That's correct. I know last fall, gold investors were getting excited in November when the U.S. Investors were fleeing the general equities, rushing into the U.S. dollar and gold at the same time. That, really encouraged a lot of gold investors. But as you say, the gold price is bumping between 1280 and 1300. And not only does it need to get through 1300, but I would say it really needs to bust through about 1375 before you're really going to see a lot of money rush into the sector.
Yeah, I totally agree with you. And that leaves a lot of these companies in somewhat of a precarious position because, look, mining is as capital intensive an industry as there is. And the degree of optimism towards the future price of metals or whatever you're mining, there's got to be some optimism there. Or how do you raise cash, and how do you finance these deals? Now, one thing I will tell you, there's a lot of companies, especially at the Metals Investor Forum that I attended prior to the VRIC, that they were well capitalized. They had cash, and they weren't burning through it real fast either. They had cash, they had near-term projects, or they had projects that were so stellar that the cash just came. But for the rest of the herd, this is a very difficult time, isn't it?
That's right. If you're looking at investing in pre-revenue companies, those explorers or developers that don't yet have a product to sell, you really need to look at it as a venture capitalist, and you want to make sure you're not going to be diluted out of your share of the company before either the gold price or the commodity price, the commodity that they mine, that price rises or they come into production. And so you really want to see at least a year's cash on hand. You want to know what their burn rate is, a year, preferably 18 months. Like you say, Kerry, the good companies do have that, but you do want to be cautious, especially with these pre-revenue companies, because they're going to need to go back to market. And with the way the mining sector moves, even the gold price, if it trends back down in these next few months, any financing that they do is going to be very dilutive.
And we've seen these companies literally go into hibernation for long periods of time, for years, where they're still traded, very little volume in their shares, very little activity, and literally the costs have just been kept to an absolute minimum, waiting for the market to turn around. You kind of want to avoid those type companies, don't you?
Yeah, you do want to see, the best companies, if they have a good deposit, they are still going to be able to raise money even in a downtrend, whether it's from institutional investors or from high net worth private investors that really understand the projects, that they're still willing to invest money, even if they're a little weary about the gold price or whatever commodity the company mines. And that's another thing you should be looking for. If you're looking to invest, you want to understand who owns the shares, what institutions are backing that management team, investing in that company, what high net worth individuals have put their money in there, because they then have, they want to protect their position in that company. So oftentimes someone that already has a 15% position in a junior miner, if there's downward selling pressure, that person might step up, buy a lot of shares to kind of sustain the share price and the market capitalization of that company.
So yeah, it's really a difficult thing. And so you got to be very careful when you get into this sector, right?
Absolutely. If you're going to delve into the pre-revenue companies at this point, you got to look for those characteristics that we just discussed. A safer bet would be find a commodity that you believe is going to be headed higher. I always say in the next 3 to 5 years that you're confident on the supply and demand fundamentals that's going to see a rising price of that commodity, and then go for like a mid-tier producer versus the majors, because you're going to get a lot more upside, a share price appreciation, a mid-tier producer, and look for those producers that are in the lowest quartile of operating cost.
So keeping the costs under control. Hey, what about management? We know how important management is, and you've got to pick the right management. That's kind of what you and I do. We try to expose these managements to the public so that you get an idea of what they're all about. So picking good management, which Warren Buffett always says it all comes down to management. What do we do?
Well, I'm kind of just parroting what anybody who knows anything about mining stock investing has said in the past, but you want management that has a track record of success, in the specific type of endeavor that they're doing. So if you had a manager, a director or a manager that was successful with a uranium company in Saskatchewan, he might not be successful with a gold company in West Africa. So there has to be something similar, both in the type of deposit that they're going for, or just some parallel characteristics with his or her current project. So you want someone that has been successful, and that could be, starting out with a $20 million market cap company, and then they define the deposit, sell it to a major or a mid-tier for $500 million. And that manager and all the investors profited greatly. You want to see someone that's aligned with the shareholders. How much did they buy their shares for? That's something you should research. Were they just granted these shares? Did it cost them anything? Did they get it at 2 cents a share, whereas you're now buying in the market at 37 cents a share? Because if that's the case, if the majority of their position was bought at 2 cents and you're buying at 37 cents per share, they're actually not aligned with you, because the incentive to sell is too great, whether the company succeeds from that 37 cents a share point or onward. So they have to be aligned with you, and then they have to have a good reputation. I mean, in the day of the internet, you can just type in their name and type the word scam or fraud next to it, and something's going to come up. It may or may not be accurate, but something's going to come up.
It's a starting point for your due diligence, because look, no matter if you're a educated investor and you do your own research as well as following those of others, you want to do your due diligence and you want to figure out, hey, can I trust these people? So it might not be true, a lot of what's in the internet. People can say anything they want, and you don't even have attribution. But on the other hand, especially if somebody's got a history in the industry, it might be true. And that's why you need to always search. So you got some feelings here about copper. I don't know. I'm a little agnostic about copper, but what do you see happening in that market?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Radruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the underfollowed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
Well, for 2019, I think copper could be one of the safer commodities to invest in copper developers and producers. The gold price, as we've discussed, it could continue to trend upwards, or like last year, last April, May, it began to trend down. And I know I saw losses of 25, 30% in some of my gold equities positions last year. But with copper, what we know is that if you get a shovel-ready project, it's going to take at least 5 to 7 years, assuming it's financed and everything goes well. That's the soonest that a project like that could then become a mine. What that means is we know what projects are out there that are going to be coming into production. We can forecast pretty accurately the supply that's going to be needed, and there's going to be about a 20% shortfall of supply versus demand, at least within about 3, 4, 5 years. And that's really not even factoring in if there's an exponential growth in the electrical vehicle revolution, because electrical vehicles require a lot more copper. Like a traditional car would require about 18 to 45 or 49 pounds, but you can use 150 to 200 pounds of copper in an electrical vehicle. So there's a new source of demand there that when a lot of analysts look at the copper market, they don't always factor in, because it is a little bit of an if. But even if you leave the electrical vehicle revolution aside and potential increased demand there, the copper price is going to rise. And when you look at the copper equities over the last year, you get some of the big boys like Freeport-McMoRan. Share price was at about $20 a year ago, went down to $10. It's rose about 25% to $12 or $13, I believe, in the last month. But, if you invest in a company like that, you could do very well, especially as the trade war and truce between the United States and China is going on. If there is a resolution that's announced in the first half of this year, I would expect the copper price to rise in the short term. And that's regardless of the long-term positive supply and demand fundamentals and outlook for copper. So I think a lot of these copper equities, it's worth taking a look at. If they have cash, if they're a pre-revenue company and they have a good project, many of them have gone down since just the summer of 2018. I've seen 50 to 80% drops in some of these juniors. So they could be a good buying opportunity right now.
Interesting. Yeah. Well, hey, regardless, like you said, if electric vehicles really take off, and right now they are nothing but a niche market holding much promise. But if they really take off, then copper, cobalt, and many other minerals can come into play. And you could see a supply squeeze on these things because so much of the electric vehicle industry relies upon copper and other minerals and elements as well. So, but like you said, even if you don't have the EVs take off, then we're still in a situation where mines take so long to come online and supply, the marginal production is shrinking. So we don't have that much of a cushion in copper, do we?
No. And the last couple people on my podcast that I've interviewed, a couple of the commentators say copper is their number one for 2019, and they're sure of it just because of what I just brought up, those long-term supply and demand, 3 to 5 year outlooks. There's no way of getting around that. Even if the global economy rolls over, there's still going to be a supply deficit in copper. Therefore, the price, the expectation is the price per pound of copper is going to go up no matter what.
So yeah, copper, and it's trading low right now. It's like $2.70 a pound, right? So
yeah, and it was like $3.30 in the summer,
and it could easily go up to $4 quicker than anything else. And there's not a lot of political influence in the copper market either, right?
I'm not an expert on that, but I do think politics. Kerry, I would say politics has an influence on the copper price because, for example, one junior copper producer with a lot of development properties that I own, that share price has gone down about 80% in the last year. And the majority of that drop occurred after July with the Trump-China trade war talk and tariffs and such. So there is political ramifications that affect the copper market.
Yeah, but not politics involved in setting prices and such, less so than in perhaps precious metals. Even if you're not a conspiracy theorist, the government action definitely affects precious metal prices directly in many respects. So, but copper,
and I think government action is going to affect the profitability of a mining company because they are at the mercy of the host government.
Very true. Very true. We see there's a lot of copper down south in South America, a lot of companies, and they're in Argentina, they're in Chile. Argentina goal is to become another Chile in the copper mining industry. So we could see some rather significant resources projects come on tap over the next several years. They seem to have really speeded up from what talking to the companies at VRIC, the Vancouver Resource Investment Conference, they're so favorably disposed to mining now in Argentina because they know it's a surefire way to raise living standards and improve political stability. So these are all good things. So there's good trends, there's uncertainty, and a lot of it we just have to kind of sit back and watch what's going to happen, right? Yeah.
Find your commodity that you are committed that the price of that commodity is going to rise within the next 3 to 5 years. From there, like we've talked about, find a good management team, I'd start with cash flowing mid-tier producers. And then after that, you fill up your portfolio with some of those, go down into those pre-revenue companies that have at least 12 to 18 months of cash on hand.
Yeah. Yeah. That's cash is king. There's no two ways about it, is there? Right?
Nope. They need it to operate. And that's why they're producing the minerals to sell it to the market.
Yeah. Yeah. Hey, and you know, one thing I was telling you about this really noted Canadian journalist, Rex Murphy, and he made, you know, I made this point numerous times, but he made it so much more eloquently than I have ever done. It's like, if you want your modern conveniences, if you want civilization is held together by two overriding physical, I guess, conditions, if you will. Number one is energy, because if you don't have energy, you can't move anything. You can't go anywhere. You can't produce. And number two is you got to have minerals in order to produce things like iPhones and to produce the modern conveniences of life, from dishwashers, washing machines, ovens, all these things. So to be fighting this stuff is pointless. And the fact of the matter is, this is how wealth gets created. And perhaps the current generation is going to find that out, maybe the hard way here, but they are going to find out at some point, aren't they?
Yeah, I mean, the role, in my opinion, and you and I think, based on some previous talks we've had, are pretty close philosophically, but the role of government is to facilitate the production of these things in a safe way for all of society, and that doesn't take advantage of any one group or is overly disrespectful of past property boundary lines and things like that. Yes. But I do know from some of the conferences that I've attended over the last year and talked to mining CEOs, I've talked to a couple of mining CEOs in Idaho, and they said that with the 2 years of the Trump administration, one of the things that they appreciate is the streamlining of their permits to do exploration work in Idaho and the states has been dramatically reduced, whereas it was years before possibly to get an exploration permit, just an exploration permit, not even an extraction permit.
It was madness.
It was madness, but now it's 9 months, versus 3 years before.
Right. Yeah, that's remarkable. And hey, we don't have to get on the Trump train here. We both have favorable dispositions towards a number of his policies. But in the mining field, the other thing he did was prior to his becoming president, there was a regulation pending, and I guess in the Bureau of Land Management, BLMS, that if you had a mine, you would have to monitor it, not just restore it, which is reasonable to restore an exhausted resource back to nature. We should all encourage that because it's not pretty seeing the countryside scarred. But the other thing was that they'd have to monitor pollution on the site for 30 years, and nobody could afford to do that. And that was going to be the death knell for the mining industry in the United States. And the first thing that the Trump administration did was dump that policy. So I guess be grateful for small favors. Anyway, Bill, where do we find you these days?
Podcast, just go to any podcast app. You can type in Mining Stock Education and I'll pop up. If you want to find us on the web, you can go to miningstockeducation.com.
All right, miningstockeducation.com. We always have a link to it in the show notes to this interview. Don't forget, if you're listening to this on YouTube or through the conventional podcast channels, please subscribe, like, and share. It really helps us out a lot when you do that. You help get the word out. You help grow the show. And hopefully that's something, a goal that you're totally in favor of. And Bill, it's always great having you on. We will talk to you again real soon, and let's see what the next quarter unveils to us.
Thanks, Gary.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.